All right, hi everyone. I am Ben York. I am the Marketing VP at Wootrade, and recently our community has seen a lot of growth. So we wanted to give our community members and supporters a chance to see behind the curtain. So we started this video series called Let's Talk Liquidity so that we could talk to clients, partners, and team members and show them a little bit more about what goes on behind the scenes. So who better to start with today than our CEO and co-founder, Mark Pimentel. Mark, do you want to go ahead and say hello?
Hi guys, this is Mark. I'm talking to you here from Taipei, Taiwan. Very happy to get a chance to address the Wootrade community.
All right. Mark is one of the most experienced traders in the space. So why don't you start by telling everybody what does it mean to be a pro trader, and why did you want to become one?
I think being a professional cryptocurrency trader means that you don't get a lot of sleep. It means that you never really get to go on vacation. You never really get a break from the cryptocurrency markets. You wake up every morning and the first thing that you do is you check your P&L, you check the markets the day before. But it's a life that you choose and a life that you love. And I think that it's something that has become really something that's a really fun part of my day-to-day life. Really something that I look forward to doing, and really it's a constant challenge and a constant passion of mine. I've been doing trading now for about 15 years. I started trading in the traditional markets. I started trading the stock markets and futures markets, different hedge funds in Chicago and New York. And only in the last three and a half years have I been trading cryptocurrency. But the cryptocurrency markets are in many ways very different from the traditional markets. I think most notably because they're 24 hours a day, 7 days a week, but also because they're global markets right from the start. So you get kind of Asian traders, you get traders from the US, from Europe, from all over the world interacting with each other and creating all types of different interactions and economics and kind of different interplay that you don't get as much in the traditional markets. So from a kind of a microstructure point of view, it's really interesting. And most of the work that I do is studying the microstructure of trading, which means I look at the details of how trading happens. We spend a lot of time looking at the very small, very granular detail of kind of minute by minute, in many cases kind of millisecond by millisecond of what's happening in the data, order by order, how price changes are happening, how price changes occur, and we try to study all these different aspects of the markets and try to understand how prices move, why they move, are they what they're reacting to. And how can we better predict what will happen in the future using data that we have available? So it's to me it's really a passion of mine. It's really something that I truly enjoy. And over the last few years, I've been fortunate to have built this this company that I get to work with such a talented group of individuals, where we get to kind of study the markets and live the markets. And it's just become such a fun part of my life that I really kind of enjoy coming to work each and every day.
Okay, well, it sounds like that you as a professional trader have a lot in common with the retail trader in terms of sleep deprivation and waking up first thing in the morning and checking the prices. I think we're all in this together on that one, which kind of leads into my next question about, as a retail trader myself, what's going on? Are you professional traders out for my blood? Are you trying to, take everything we got? What's the deal there?
I think all traders in some ways are out for blood, right? We're all looking to make positive profit types of trades, and I think what's important for all traders to understand. I mean, this is how we think about trading. Here at Kronos Research is the company that we run partnered with Wootrade. Kronos is a partner of Wootrade that runs a lot of our algorithmic trading strategies, and Wootrade is our liquidity pool. And in many ways, there are a lot of synergies between the two different companies. And the way that I think about trading is that we try to understand when we do trading how we are making money, and essentially who we're making money against, essentially who we're trading against. So as a professional high frequency trader, we very carefully understand the frequency and the horizon of our trades. So most often when we're looking at the markets, we're trying to actually model a very short period of time. So somewhere between 30 seconds, sometimes even shorter, sometimes maybe even slightly longer, maybe 2 minutes, 5 minutes. And most retail traders, they don't look at this particular time horizon. They're usually looking at maybe 10 minutes, 30 minutes, maybe a few hours, a few days, right? So, in that regard, even though as a professional trader in the high frequency space, we're looking to make profit, and as a retail trader, you're also looking to make profit. In many ways, we're not necessarily competing with each other because we're looking at different time scales. And even inside of our company, a lot of times we have traders or trading teams that are trading against each other, and they can actually have the same bet, or they can have opposite bets at the same time, and still, in some ways, both be profitable because they don't have the same kind of concept or the same horizon in mind. So that's kind of how I think about trading, is that there are many ways for traders to coexist. And a lot of what we're trying to do with Wootrade is to create an ecosystem where we can create an ecosystem such that Wootrade can Wootrade flow, Wootrade volume, Wootrade traders can interact with the trading prowess of Kronos and create an ecosystem where both sides can benefit.
Okay. All right, that's it's one of those things that I feel is very misunderstood in the space. There's a lot of suspicion about what the institutionals and pro traders are doing, so it's always interesting to have you clear that up. The next question goes more into Wootrade. So I'm kind of curious, why does I assume you're a very highly successful HFT professional trader. Why did you decide to, we're going to go out and build a liquidity network?
Yeah, it's an interesting story. I think there's a couple reasons. I think the first is that we've always wanted to build something greater than just doing trading. I mean, when I started my cryptocurrency career, we actually had initial aspirations to create a cryptocurrency exchange. We wanted to create different products that we could market to regular people, whether it be investment products, whether it be creating futures contracts. But initially we found a lot of difficulties, mostly due to regulatory concerns, mostly due to the difficulties with understanding the legal landscapes across different jurisdictions. And I felt that a lot of my core competency is really in trading, is really understanding the markets, and not necessarily the regulatory environment. And so we decided let's hold off on that, and let's become really good at trading first. And once we have that achieved, then we can figure out what else we can do from that point. So that's what we did. My partner and I, Jack, we decided let's build Kronos Research. Let's be one of the top traders in the space. Let's connect to as many exchanges as possible. Let's build a really strong trading team. Let's just understand the cryptocurrency dynamic and landscape really, really well. Once we did that, we started getting approached by a lot of cryptocurrency exchanges for us to trade. They would come to us and they would say, hey, you guys do a lot of trading volumes on the top exchanges. We want you guys to come and trade with us. And we found that even though it was generally profitable for us to connect and trade with as many counterparties as possible, we just didn't have the time. We didn't have the resources. We didn't have the attention span and the people to connect everywhere. And it actually made much more sense to create a system where these exchanges could come and trade with us. And so the idea of Wootrade was born, and the idea was that we would essentially create a platform such that initially we could supply liquidity to many exchanges in a model that they could connect with essentially our excess liquidity initially, and later on with liquidity that we would supply to them.
Okay, that's a very clear, very concise answer, so thank you for that. I want to talk a little bit about the zero fee model because it's very, very common in traditional markets, but when you start mentioning that in the cryptocurrency sphere, everyone starts, looking at you like you're trying to scam them. So we've kind of explained previously how the zero fee model works, and I'm kind of curious, long term, do you see other, other exchanges and other trading platforms moving towards this model? How do you see this going down?
So I'm actually very familiar with the economics of the zero fee model. One of the places that I used to work at was actually Citadel Investment Group, which operates the retail market making, or Citadel Securities, which operates the retail market making operation that's been in the news with GameStop, and is owned by Ken Griffin, who was recently in Congress. I also used to work at another company called Knight Capital, which is now part of Virtu, which is, I think, the second largest retail market maker. And so at some of my experiences at this company, particularly the second one, I was actually a quantitative researcher. So I was a quant, operating a lot of the systems behind the scenes, right? So if you watch the Congress hearings from I think last week about this issue, they talk a lot about payment for order flow, and they talk a lot about how Robinhood sends their orders to these retail market makers, and then there's some magic that goes on and they get executed. Well, that black box essentially was my job. I was behind the scenes, and I was the one who was calibrating these models, making these trading systems, and trying to understand how the economics play out. And so a lot of what we're trying to do with Wootrade is similar in that way, in the sense that we're trying to utilize some of the same economic incentives, most notably the fact that as a retail market maker, Kronos Research is able to trade against retail traders in a way that retail traders actually profit, or actually gain economically versus trading on other exchanges on the open market. So this economic model is pretty much the same one that these other platforms in the traditional space use in order to offer zero fee trading, and that's essentially what we are trying to do as well. A lot of what I look at in terms of business models is actually modeled in the traditional space. So while we are very cautious about, I think some of the, we're very cautious about some of the motivations behind some of the recent actors in the GameStop fiasco. So we want to be very careful about kind of treating retail investors fairly, but from a kind of a higher perspective, we do want to create a playing field which is as fair as possible, and we do think that we can do that with Kronos and with Wootrade kind of partnered together in a very unique way. So this is actually something that's pretty unique, I think, because this partnership is one that is not available to many other kind of cryptocurrency companies or cryptocurrency firms out there. And so it's something that I think is a very unique opportunity for us at this juncture, and which is why I'm so excited by the work that we're doing here at Wootrade and at Kronos, because we're able to offer this type of service to people, and I believe that we're one of the few kind of groups of people, a few firms that are able to do this in a way that really benefits people.
Awesome. All right, great. I noticed that as part of the WOX platform, and I've actually heard you speak about this in the past on one of your Clubhouse events with SBF, and you were talking about decentralizing these institutional trading strategies that might only be available to the elite few in the traditional world, and trying to make them more available to everyone in the decentralized world. How can retail investors and the average Joe, how can they benefit from the trading strategies that you guys do at Kronos Research, and maybe how do you see that playing out in the future?
We've always wanted to open up a lot of our trading strategies to as many people as possible. And actually, this is one of the core reasons why we started Kronos, was to try to understand how we can use blockchain, how we can use some of these newer technologies to make this possible. And a lot of the difficulties are trying to understand how we can do this from a regulatory standpoint, from a legal standpoint, from a marketing standpoint. But we have a lot of the tools from a trading point of view already. And what we're doing with Wootrade is we're really trying to kickstart this initiative and put all these different aspects together. I think some of the initial, some of the initial things that we're going to be pushing out are going to be some of our kind of longer term strategies, which I think are going to be really valuable for a lot of retail traders to watch and to try to learn and emulate from. And the way that we're doing this is we actually want people to watch these strategies and to try to understand when they want to trade with them, if they want to trade against them, they can, and if they want to, they can even kind of invest or trade in those strategies, depending on the kind of legal framework that we're able to provide.
Okay, cool. Actually, that question came from the community, because we actually put it out there to the community. What did they want to ask? And that was one of them. Another one that came was more Kronos related, and they were asking about how do you, as Kronos, determine which coins, especially the lower cap coins, that you guys decide to trade on. And if there's like a minimum threshold where you won't trade something smaller. So how does the decision making work there?
Well, as Kronos, we can trade anything. We can trade cryptocurrency, we can trade equities, we can trade futures, we can trade currencies. The decision on what to trade is really subjective. It's really up to us humans in terms of where we want to spend our time and how we want to use the resources that we have in terms of our own time, in terms of the computing resources that we have available, in terms of the data that we're recording, and in terms of the simulations and analysis and trading systems that we run. A lot of times trading the less liquid coins are actually more interesting. A lot of times they're more profitable from dollars, from a kind of per dollar point of view, but generally less profitable from a total dollars point of view. So you can generally make more money trading Bitcoin, just because there's larger notionals being traded, but you can generally make more money per marginal dollar trading something that's smaller cap token. But there's just fewer of those, and so we usually have to make a decision as to how we want to utilize our finite amount of time and computing resources. And usually when we do that, we tend to focus on the larger cap tokens. But it's it doesn't always necessarily mean that those are the only ones that we are able to trade. It's just those are the ones that we choose to trade.
Yeah, I have obviously I know the answer to this, but as a very risk-adverse person that I know that you to be, you probably wouldn't think too highly of some of my altcoin portfolios. Okay, let's get to some more questions from the community here. Somebody wanted to know if you had any tips for somebody who was trying to go from being, just a retail trader to a professional trader. What tips you would have for that?
I think my main tip for someone who wants to be a professional trader is it's really all about the passion, and a lot of the one of the things that I've been spending a lot of my time doing over the last few years is working with newer researchers, newer people to the field, as we've been expanding our company and expanding the number of people that I work with. And a lot of the newer recruits into our company are new to crypto, new to trading, and we spend a lot of time here at Kronos Research and Wootrade on training and education for our staff, and I give them the same advice as well. A lot of I think trading and understanding the markets is just about the passion that you put in, the amount of kind of effort that you spend in trying to understand the markets and understanding the data, understanding the what's going on. Is just so important, because the compounding effects that your work has is so strong, right? So if you spend an extra just 10% each day, just trying to learn more and understand more, it just builds up each and every day. And I think all throughout my career, this is something that has really resonated in me very, very strongly as well. No matter if I traded crypto or I traded in Europe or in Japan or in the US, it's all about just trying to understand what you're doing really, really well, understanding as many aspects of it as possible. And a lot of times there's a lot of experimentation involved. When we approach trading or business or really any endeavor within Wootrade or Kronos, I think we try to approach it in a very kind of scientific way. At least I try to, which means that we try to do a lot of experimentation. We try to do a lot of reflection. We try to be, in some ways, a little objective about how we measure, what is our hypothesis, what is what are our results, and I try to do the same in how I approach, kind of how I grow and how I learn as a trader, as well as a professional. And so, my main advice is just try to keep at it. I mean, you're not gonna be professional. Like you're not gonna go from an amateur to professional right away. But it's all about kind of the effort that you put in, the passion that you have, and the amount of time and energy that you're willing to devote.
How long do you think it would take to train me up?
I think you're right there. Already there.
Probably not going to happen in this lifetime. But anyway, I do have a question, because as a professional trader, this is actually my personal question. Okay, so as a professional trader, obviously you have a lot more money tied up in these markets, and how do you detach yourself from it? It must be a very stressful experience when the market starts moving, which it does very regularly. Mm-hmm. So I'm very curious how you put the phone down, or you go back to having a normal life.
Yeah, I think the emotional aspect of trading is a very important part of it. And a lot of times when we have new people that are working here, whether it's Kronos or Wootrade, this is one of the hardest things that they have to deal with. Is there's a lot of money on the line, or there's a lot of it's data, or it's assets, and they get nervous, and they get stressed, and sometimes it impairs their judgment, right? And a lot of times when we do automated trading, when we do quantitative trading, what makes us successful is what makes these systems successful is that they're able to take the emotion out of trading. Right? The fact that they can buy when markets are fearful, right? And they can sell when markets are jubilant, right? And this is in one way what makes these trading systems very successful. And I think for me, I've learned very early on in my trading career that it's very important to try to control your emotion. That it actually, while it's important to understand that being emotional will, in some cases, cause you to kind of understand the importance of what you're doing. In many cases, it will also cause you to panic, will cause you to have impaired judgment, will cause you to have kind of nervous bouts of anxiety, and in those cases it's generally your productivity is less, and you're not able to work as well. And so a lot of times for me, I just try to detach myself as much as possible. A lot of times it comes with experience. If you've just been doing it long enough, it just becomes kind of another day. I also try to kind of practice a lot of risk management. So, I think anyone that knows me knows that I tend to think about risk in a very risk-averse type of way, but also in a very controlled type of way. So I try to understand what is the worst case type of risk, and I kind of work myself up from that. And I think that really helps a lot in trying to manage my own emotions and my own emotional kind of insecurities and fears.
Okay. Now, for those of you who don't know, Mark is more on the quantitative side, and then the other co-founder, Jack, he's more of a discretionary trader, which means he kind of goes by his instincts and his knowledge of how markets move. Do you two ever have like disagreements, or just not see eye to eye on how to allocate capital or which way to play the markets? How does that relationship dynamic work out?
Well, we do have disagreements, and I think we do have disagreements fairly often about some of these things. I think a lot of times they're not bad disagreements. I think they're actually good disagreements, and we actually encourage this type of thinking within our company, because we believe that kind of healthy debate is actually a good way to encourage innovation, encourage experimentation. My co-founder Jack, like you mentioned, is generally more. He tends to kind of follow his instinct a lot more, and I try to be more kind of quantitative and objective and data-driven about my decision making. And I think that there are many times in which I have been proven wrong, and I think that he'll probably admit that there are times that he's been proven wrong. And so, I think that the company has been successful because we've been able to find a kind of a happy medium between these two decisions. So sometimes we tend to err a little bit more on my side, sometimes we err a little bit more on his side. And it's something that we just kind of do on a more fluid basis. We don't say we always do it in a very kind of data-driven way, right? Sometimes we take more risk than we can prove that should be taken, and sometimes we don't. But it's so far it's worked out very well, and I think we'll try to continue that kind of healthy level of debate.
Okay, no, that's all very interesting. I have one more question for you before we wrap up. I've got to ask it. I mean, I'm sure it's probably not something that you do professionally, but in terms of the market predictions for this bull market, we've been going for a few months here now. How much longer do we have, in your opinion?
Ooh, it's always tough to make predictions. Most of my job is predicting 30 seconds out, and so that's my core thing. I think predicting longer term. I've been bullish for a long time. So I think I haven't been so surprised by this move up. I think that it's been a little quick recently for my taste, and so been a little worried recently. And I think the market's been paring down a little bit over the last I guess 1 day, and so that's I think a little healthy. But I think overall I'm still pretty optimistic about cryptocurrency, and I think a lot of that is because there's just so many developments in the space. There's a lot of people kind of investing their lives and their time in whether it's cryptocurrency technology, liquidity, infrastructure. That I think that the space is continuing to mature. There's innovations happening. I think that regulators around the world are starting to warm up to the idea of cryptocurrency, whether it's an asset class or a method of payment or all these different aspects. And so, I'm very bullish.
Okay, awesome. Is there anything you're really excited about coming from Wootrade in the next year?
I'm just very excited about our growth. I think that there are so many things that we're doing that the world is really has not seen yet. And I think that part of what we're going to be doing over the next years, we're going to be continuing to build. We've mostly been kind of heads down building over the last few years, and I think that a lot of the work that you've been doing, great work that you've been doing, is is trying to kind of build outreach and telling people about the work that we've done, and I think that we're going to be continuing to do, and so I'm just so excited about that.
Yeah, no, I think the community is really starting to see it and understand and appreciate the professionalism that a lot of the team has behind it, because it is very opposite of the trend we've seen over the last half year, where we've had a lot of these DeFi projects that some of them are quite innovative and some of them are really innovative, but a lot of them are just more copy and paste type things. So it's really a breath of fresh air when we have these chances to talk and we see the real type of building that's going on behind. So I want to wrap up here, and I really want to thank you for your time, but also I want to thank the community because they put in a lot of questions, and I didn't get to all of them because some of them were more operational or maybe more related to like the Wu tokenomics, but having Mark here, he's really an expert on the trading side. So that's kind of how I selected the questions that I asked, but we'll continue to have a lot more of these video series in the future. So anyway, thank you, Mark, for coming on, and thank you everybody for tuning in. Yeah, that's it for now, I guess.
Okay, great. Thanks a lot, everybody. Bye.
Bye.